Hi, this is Elijah Wagner, and this is my oral report for money management and planning for the future, renting versus buying a home, and a mortgage loan selection assignment. So I live in Escondido, California, and the average rent price of a three-bedroom apartment is approximately $2,500 a month. Property size and amenities. The typical three-bedroom apartment ranges from around 1,200 to 1,500 square feet and often includes basic amenities like in-unit laundry, parking, and access to community facilities. That could include pools, spas, in-unit or in-building dining, etc., etc. And then the annual rent increase estimated for renting an apartment in Escondido, California is 3% per year. As opposed to buying, the median home price in Escondido is around $700,000 for a three-bedroom, two-bathroom house. Approximately 1.1% of the home value per year is going to be converted to property tax, which would be around $7,700 annually. Homeowners insurance is estimated at about $1,200 per year. And then maintenance and utilities estimate is about $500 a month. Down payment for the home, which would be about 20% of the home price, would be around $140,000. Mortgage interest rate, current rates are around 4.5% for a 30-year fixed rate mortgage. And loan term would be 30 years. So renting the monthly rent again, 2,500. Annual cost would be about 30,000, and the total cost over 5 years would be $159,274, accounting for the 3% annual rent increase. And then for buying, the loan amount after the 20% down payment would be $560,000. The monthly mortgage payment with principal and interest would be approximately $2,837, and the monthly property tax and insurance would be around $733. The total monthly payment in all would be 3,570, and then the total cost for that over 5 years, including estimated maintenance and utilities for deterioration, repairs, etc., would be about 246,000. Now, with appreciation and depreciation, the projected home value increase in Escondido has been appreciating as opposed to depreciating ever since the housing crisis of 2008 at an average rate of 4% per year since real estate is back on the rise. And the potential home equity growth over 5 years for the statistics we talked about earlier would be approximately $151,000. So me personally, I would choose renting for the $100,000 budget listed in the assignment. This is because of financial factors. The initial down payment of $140,000 for a home, it would exceed the available $100,000 limit, which would make purchasing unavailable for us without additional money. Long-term planning, if I plan to stay in Escondido for less than 5 years, renting offers a lot more flexibility and lower upfront costs as opposed to signing a long-term lease. And then the risks and benefits. Renting avoids the risks of associated property value fluctuations and the responsibilities of home maintenance. Again, things like repairs if disaster happens and there's a storm or there's flooding, which there usually isn't in California, but still that's an option. So now my mortgage loan selection, if I did have to buy, I researched three different types. I apologize, four different types of loans. Adjustable rate mortgage, ARMs, which are interest rates that may change periodically, often lowering initial interest rates but potential for future increases. FHA loans, which are government backed loans with lower down payment requirements, which are ideal for first time buyers, say with low credit or high risk of not being able to pay back their debt. And then a VA loan, which is available to veterans and active military members, which offers better terms for them and doesn't require a down payment, although I would not be eligible for those since I apply to neither of those categories. And then the conventional loan, which is just a regular loan not insured by the government, which does require higher credit scores and down payments, which again I would not be available for. The mortgage selection I would choose is the FHA loan. The general loan amount will be about $665,000, assuming a 5% down payment of $35,000. The interest rate would be about 4% for a year for a 30-year fixed rate. I apologize, FHA loan, and then the monthly mortgage payment, which includes tax and insurance, would be around $3,800. My rationale for this loan choice is the down payment. It allows for a lower down payment, which would align with the available $100,000 budget. It's risk tolerant. It impacts my credit score positively. And again, if I plan to stay on the home for an extended period, purchasing with an FHA loan would be a better situation for me because it requires less commitment. So overall, Renting is cheaper than buying, and the mortgage loan justification would be that FHA provides the least amount of risk with the most amount of flexibility. So the home price median again $700,000, down payment $3,500. Sorry, 35,000, and then the interest is at a 4% rate for the 30 year. The monthly mortgage payment $30,176, and the property taxes would be about $583 a month, which rounds up to $7,000 per year. Homeowners insurance would be about $100 a month, which total to $1,200 a year, and then total monthly mortgage would be $3,859. I apologize if I stumbled over my words a lot. That was a lot of information and a lot of calculating that took me about 2 hours. So I hope you enjoyed and have a great rest of your day.